Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. This is going to be the mini S&P 500 futures contract that we look at every week. Looking at a last print of 1079 on the market. Kind of an interesting day. As you can see, we opened essentially near the flat line, had some volatile moves amid some news reports on the economic front. Then we had a complete breakdown and a reversal to break below the trend, as you can see right here, coming back to the underside, retesting the trend, and then just continuing on lower as we broke to the downside. And you can also see another subsequent retracement back. And then here we actually got a green bar, but right to the underside of the trend, right around the level of 1081, we come to a swing high there, and of course the market goes back lower. Well, why is this happening? How can you predict that the market's going to go lower? Well, the first thing you look at is our proprietary indicators. These are underlying the indications that we look at to see essentially where the market is likely to head. And as you can see, we have bearishness here. Red means bear, green means buy, and bullish. But as you can see, we have bearishness here. We have actually price technicals formation, which is bearish. We have a new break below the early session lows and a complete outside bar reversal to break below the trend. That leads us to trend side bearish as well. So we've got the trend, we've got the price technicals as bearish. We tried to break above the high of the prior day, which of course is also from a horizontal perspective bearish, horizontal price technicals. So it's three bearish indications right there. We actually, once we break below the trend, you can see right here, we moved right into bearishness right there on a retest of the trend. We'll just call it 1086 right there on a retest of the trend. Bearish, 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 and sliding into the bearish zone as well here for this indicator. So we literally have like 7 indicators that are suggesting to us that the bears are in total control of the market and it's likely to move lower. That was at 1086. We last end at 1079.50. So there's some really good indications on where the market is likely to head. Just kind of a snapshot look at what we look at on the intraday to see where the market's going. But having said that, as we bump up against this very psychologically significant 10,000 level, very round level in the Dow Jones Industrial Average, the 1100 level in the mini S&P 500 futures contract that we're looking at right here. As you can see, resistance, resistance, and we're really just getting some wild and choppy moves in the market, and as a result our portfolios, but nevertheless we are able to participate and profit handsomely from these wild gyrations. Believe it or not, as unpredictable as the market has been, we've gone a little old school, and we'll take a look at that in a second. One of our first systems that we've had ongoing, unchanged for about 6 years, really saved the day, and we'll look at that in a second. That's the Russell Day Trader 1.0. Just really a testament to how important it is to be as diversified as possible among non-correlated and, of course, non-optimized trading models. Very important to be diversified. That's why we have almost 40 trading methodologies. So the lion's share of our methodologies hopefully will be on the winning side of the market. But as you can see with last print of 1080 on the market, and of course the bears are in total control. This is Friday. Thursday, Wednesday, Tuesday, and Monday. As you can see on this Tuesday, we did have some bearish indications there. Triple threat bearish below the trend. Did get a move lower to the downside, but you can see this errant bullishness right here really kind of supported the market. The day following, we did get bullishness, albeit diverging. Here, if you look at here, we have a pretty impressive divergence. Slid into the bearish column there. Weren't able to get above the very round, significantly round, technically significant resistance, and just completely broke in the later half of the session. Very strong move to the downside. And then, of course, Thursday, we come down, a bear trap. We open, we hit a bear trap, just dangle our toe into the market, dangles its toe into the water, doesn't like the temperature, and blasts to the upside. We have full bearishness here, actually. We did have a little bit of neutrality here, and of course bullishness was the case right here. Once we broke above the trend, we had bullish break above the trend. Once we broke above the high right here around 1081, it was just off to the races for 10 points, as we now at this point had a full bullish bias. Nevertheless, that's the discretionary side of things on an intraday basis. We're going to go ahead and look at a chart of the daily. Actually, we're going to look at this right now. This is the aforementioned Russell Day Trader 1.0 that we've literally had ongoing. This is a part of our venerable MapDT original portfolio. This, of course, is one of the OGs, the OSs, I guess I should say. And as you can see, profiting immensely. We'll take a look at that in a second on this Wednesday and Thursday, just really catching the moves right before the market was able to see them. There you see going short at 617.10, holding for almost, well, the whole of the session. Actually bounced back, gave back a little bit of the profit, but right back to the plus side on Thursday. Believe it or not, just taking the trade right in the mix of things, saying, you know what, this market is going to go higher. Boom. This market is going to go lower. Boom. So they're just very proud of the very long-running Russell Day Trader 1.0. That's that. Looking at a cash market of the S&P 500, as you can see, here we are Friday, Thursday, Wednesday, Tuesday, Monday. Last Friday, we tried to print a high-level ET sell signal, which we mentioned was essentially just a buying opportunity to get back in on the short side once you retested the former resistance. That, of course, coming in around 1080 in the cash market. We dangled a dangling participle right here, reversed back to the upside, but had an outside bar reversal right here. So we really need to hold this 1080 level, getting kind of significant. Having said that, should we break back below and reverse this reversal, obviously we're going to have a quick move to 1050 and the market in a nice trading opportunity. Nevertheless, from an official market timing perspective, we remain fully bullish. We've had some moves to gray status in our momentum and directional movement, but we remain fully bullish from an official market timing perspective, with a current open gain of 122 points after calling 600 points or so, almost 600 points in the last 16 months. Are free that we send out to you, official market timing biases. We're going to go ahead and switch over now. So we remain fully bullish. If we, like I said, if we break back below 1080, we're going to have a quick move to 1050. Below that, we'll get discretionary bearish and may actually move to officially bearish. Below 1050, actually probably just move to neutral. Should we get a move back below the very key 960 to 980 level, we might go back to bearish, but that's where we stand from a price technical perspective on official market timing basis. So, got our Halloween coming up. Here's a couple of spooky trading specials that we have on the market. We mentioned the venerable MapDT. Here you go right here. The Russell Day Trader still adding value after 6 years of running. Huge gain Thursday, trading a 4 lot on our Map Black, $4,160, XRDT protected. And then this follows the astounding $5,800 gain, trading 4 lot. 4 buys and 4 sells for $5,800 trading a Map Black. Really just saved that portfolio, making huge profits. Is the Russell Day Trader 1.0 over the last few days. It's also allowed the MapDT to post. As you can see, there are the trades represented in Strategy Runner, and $4,195 in just 2 days. And then today, we're posting more gains for the MapDT. There you saw on Wednesday, $1,695. $3,220 on Thursday, and here Friday up another $1,975 for a total 3-day profit of $6,890. Now, of course, you can subscribe to this portfolio for 3 months for $2,900. Our venerable portfolio, very diversified, very aggressive portfolio as well. But we do have some spooky specials on that right now. Enter promo code SCARYVIDEO. Need a space there. You'll save $580 per subscription on the venerable MapDT. Buy 4 units or a full year, and you'll save $2,320. The MapDT version 4.0 HR is also in there. You'll save $500, save $2,000 on a full year subscription. The Map Black 80, which you'll see on the website, you'll actually save $1,200 if you want some swing participating, and that's $80,000 portfolio there. So that's where we stand, and that's what we're looking at. Just go to the website. You can click right here, click here, and hit that add to cart, and enter promo code SCARYVIDEO. Add right there, and you'll save $580. We hope you've enjoyed the video, and hope you have a great weekend, and we will see you next time. If you have any questions, go to the website, chat with the support team live, or shoot us an email to admin@MiniAnalyst.com, and we will see you next week.